Hey there, welcome back to the channel. If you're new here, we're all about helping you make the most of your money, whether you're just starting out on your financial journey or looking to fine-tune your existing strategies. Today, we're diving into a topic that resonates with so many of us, especially if you're in your 20s or 30s. The common mistake of parking too much cash in savings accounts. I want to start by sharing a personal experience that might sound familiar to many of you. One of the biggest mistakes I've made in my financial journey is something I'm still guilty of today, letting too much of my money just sit in a savings account. This isn't just a problem of the past when I was in my 20s. It's something that continues to affect my financial health in my 30s. The funny thing is, I'm not alone. A lot of young people, including many of you watching, probably have more cash sitting idle in your savings account than you should. In fact, a study by Empower reveals that the average person in their 20s holds about 28% of their wealth in cash. That's a significant chunk, and while it might feel like a safe move, financial experts agree that it's not the best strategy for growing your wealth. One of the first things to understand is that by keeping too much cash in a savings account, you're actually losing money over time due to inflation. I've had moments where I felt really good about how much cash I had stashed away. But then reality hits. That money isn't growing. It's shrinking in value. Inflation is like a silent thief, eroding your money's purchasing power year after year. Lauren Anastasio, the director of financial advice and a financial planner at Stash, emphasizes this point. She notes that even when inflation isn't making headlines, it's always there, quietly decreasing the value of your dollar. For example, $100 today won't get you as far as it would have 10 years ago, and it will be worth even less 10 years from now. If instead of letting your money sit in a savings account, you were to invest it, you could potentially earn an average annual return of around 8%. This return could not only keep up with inflation, but possibly outpace it, meaning your money would actually grow in real terms over time. Another major issue with holding too much cash is that it often signals a lack of clear financial goals. I know from personal experience how satisfying it can be to log into your bank account and see a hefty balance. But what does that really say about your financial planning? If you're anything like I was, it might indicate that you haven't fully defined your financial priorities. Financial planner Yvonne Mindren points out that when you don't know what to do with your money, it just sits there doing nothing for you. This is often a red flag that you haven't set clear financial goals or priorities. So, what should you do instead? Mindren suggests a strategy called bucketing your money. This involves dividing your cash into different categories based on when you'll need it. Short-term bucket. This includes money you might need soon, like your emergency fund. Mid-term bucket. This could include funds for goals you plan to achieve in the next few years, such as buying a home or starting a business. Long-term bucket. Finally, for long-term goals like retirement, you can invest more aggressively in things like stocks or real estate, which are expected to outpace inflation over time. By aligning your cash with specific goals, you give it a purpose and a plan, rather than letting it languish in a low-interest savings account. There's a sense of security that comes with having a lot of cash in your savings account. It's comforting to know you have a financial cushion to fall back on. But as safe as that might feel, it's also a huge missed opportunity. Certified Public Accountant, CPA, Nate Hansen likens it to never asking your high school crush out on a date. You're playing it safe, but you're also missing out on the potential rewards. The stock market over the long run has returned about 10% per year on average. This is where compound interest comes into play, allowing your money to grow exponentially over time when invested wisely. If you're still wary of investing because you prefer low-risk options, Hansen suggests looking into Treasury inflation-protected securities. Tips. These are U.S. Treasury bonds that are adjusted for inflation based on the Consumer Price Index. TIPS offer a way to keep your money safe from inflation while still earning a return, making them a better option than letting your cash sit idly in a savings account. Here's another reason to rethink letting too much cash sit in your savings account. You could be using that money to your advantage when it comes to taxes. Financial planner Tony Matheson advises that instead of letting excess cash gather dust in a savings account, you can use it to max out your retirement accounts and reduce your tax burden. For example, if you haven't already maxed out your 401k or Roth IRA, doing so can significantly reduce your taxable income. This not only saves you money in the short term, but also allows your investments to grow tax-free over time. Additionally, Matheson recommends considering a Roth conversion if you have a rollover IRA. This involves converting your traditional IRA funds into a Roth IRA, which means you'll pay taxes on the amount now, but any future growth and withdrawals will be tax-free. This strategy can be particularly advantageous if you expect to be in a higher tax bracket in the future. Why you should take action now? So, where do we go from here? If you realize that you're holding on to too much cash, now is the time to take action. The longer you wait, the more money you're potentially losing to inflation, missed investment opportunities, and unnecessary taxes. Here are some steps you can take right now. Assess your financial goals. Take a moment to really think about what you want to achieve with your money. Whether it's buying a house, starting a business, or retiring early, having clear goals will help you determine how to allocate your cash. Create a plan. Once you have your goals in mind, develop a strategy for your money. This might involve setting up different savings and investment accounts for short-term, mid-term, and long-term goals. Start investing. If you haven't already, start exploring investment options that align with your risk tolerance and financial goals. Remember, it's not about getting rich quick. It's about growing your wealth steadily over time. Review your portfolio regularly. Make it a habit to review your financial situation at least once a year. This will help you stay on track with your goals and make adjustments as needed. Don't let your money sit idle. Remember, while having a savings account is important, it shouldn't be the only place where you keep your money. By diversifying your investments and taking advantage of tax-saving strategies, you can make your money work harder for you. If you found this video helpful, make sure to hit the like button and subscribe to the channel for more tips on managing your finances and growing your wealth. Don't forget to hit the notification bell so you never miss an update. Wrap up and call to action. Before we wrap up, let's recap the key takeaways. Inflation is your enemy. Keeping too much cash in a savings account means losing purchasing power over time. Set clear financial goals. Having a plan for your money is essential for making it work for you. Don't miss out on opportunities. Investing your money can help you take advantage of compound interest and market growth. Use cash wisely to offset taxes. Consider using excess cash to maximize your retirement savings and reduce your tax burden. If you're ready to take your financial game to the next level, start by setting some goals and making a plan today. And remember, the sooner you take action, the sooner you'll start seeing the benefits. Thanks for watching, and until next time, keep striving for financial success. Make sure to subscribe to stay updated with our latest content. And as always, leave your comments and questions below. We love hearing from you.